Okay, in today's class, we will discuss about the ratio analysis. In ratio analysis, in your book, they have given you the balance sheet. You can see that we have the balance sheet. We have the information related to trading account and P&L account. So they have given you trading P&L and balance sheet, and they have asked you some questions. And what they have asked you? They have asked you the current ratio, quick ratio, debt equity, gross profits, net profit, operating cost, return on working capital, inventory ratio, and working capital turnover ratio. So in total, they have asked you the 10 ratios, and they have given you the all the information which you may require to solve the question. So before solving the question, or before discussing this particular question, we can discuss the formula related to the ratios. You can see the formulas now. They have given you the formula for the current ratio, that is current asset upon current liability. Then quick ratio, quick asset upon current liability. Quick asset means current asset minus closing stock and prepaid values, means prepaid expenses which you have paid. So in this particular case, in this particular question, you have paid the prepaid insurance. So from current asset, you can deduct, or you have to deduct the closing stock and prepaid expenses to get the quick asset. So the formula for quick ratio will be quick asset upon current liability. Then for the debt equity ratio, the formula is debt divided by the capital employed. Debt divided by the capital employed. Debt is the loans, secured and unsecured, both loans will be considered as debts. And for capital employed, you will take all the reserve and surplus plus profit which you have transferred in the balance sheet plus the capital you have given in the business. So capital which you have in the balance sheet, reserve and surplus plus profit transferred to the balance sheet. We will add these three things to get the capital employed, Then we have the gross profit divided by sales. So the gross profit you can get from the trading account and divided by the sales. The sales can also be available in the trading account. Then net profit. So net profit will be available in the P&L account. They have given the information related to P&L also. And in this case, so net profit divided by sales, sales can be available in the trading account. Then operating cost. So operating cost ratio can be easily calculated. So you can apply the formula, or if you have already calculated the net profit, you can write 1 minus net profit ratio. 1 minus net profit ratio. Then return on working capital. The next formula is return on working capital. So return on working capital formula is net profit divided by working capital. Net profit means the profit which we have in the P&L account. The profit which we have in the P&L account. So P&L account may we have a profit, and to calculate the working capital, you can take the difference of current asset minus current liability. To calculate the working capital, you can take the difference of current asset and current liabilities. Current asset and current liabilities are also given in the balance sheet. So we can easily calculate the working capital. Then inventory turnover ratio. Inventory turnover ratio means cost of goods sold divided by average inventory. Cost of goods sold divided by average inventory. And we know that to calculate the cost of goods sold, the formula is opening. The formula is also written here, opening plus purchases minus closing stock. Opening plus purchases minus opening stock. And for average inventory, Generally the formula which we follow in accounting is opening plus closing divided by 2, opening plus closing divided by 2. But if we are going according to the book, in your book they have taken average inventory is equal to the closing stock. They have taken average inventory is equal to closing stock. Then working capital turnover ratio. Working capital turnover ratio. Net sales divided by average working capital. Net sales divided by average working capital. Net sales we can get from the trading. The sales we can get from the trading, and then we have the average working capital. So average working capital, again they have calculated they have used the current asset minus current liabilities. So if we want to apply the average, so opening working capital plus closing working capital should be there, but that is not given in the question directly. So for average working capital, they have taken the current asset minus current liabilities. Current asset divided by current liabilities. So last is return on capital employed. Last is return on capital employed. Net profit divided by capital employed. Net profit divided by capital employed. Net profit will be available in the P&L account. Net profit will be available in the P&L account. And for capital employed, we have already discussed in debt equity ratio that the capital employed will be the all these reserve and surplus plus capital plus profit which they have transferred in the balance sheet, plus profit which they have transferred in the balance sheet. Make sure this point can confuse you. Please concentrate. This point can confuse you whenever you are using the capital employed. In that case, you have to take all reserve and surplus plus capital which you have employed plus the profit which they have transferred to the balance sheet. And other than this, whenever they are using the net profit word, in that case we will take the profit from the P&L account. Now we are moving to the information that is given to us. I have typed the full balance sheet, trading and P&L which is given in the book. I can forward you the question also. You can check the question over WhatsApp. I have forwarded you the question. You can check that question. But I have typed the same question over the desktop, so you can watch here, and for your future reference you can check the question over WhatsApp. And in this case you can see the balance sheet is given. So we are starting from the trading and P&L account. So trading opening purchases gross is given, and you can see that I have leave the one column, that is the inner column, and it is the outer column. I have merged the two cells to get the amount column, and this is the particular column. Here also I have merged the two cells to write the value of amount. And we haven't written anything in the inner column. We have written the values in the outer column directly for the trading only. We have opening purchases, we have the gross profit, we have the sales, we have the closing stock. You can see that we don't have a net sales, means we don't have the purchase returns and sales returns. So purchase and sales will be the same. Then for the P&L also you can see that we have written some values in the inner column, and in total we have written the value for the outer column. We have written all the indirect expenses done by the organization and indirect income earned by the organization. Plus to start means to write the values, we have whatever we have got in the gross profit we have transferred to the P&L account. You can see that 2,81,607, 2,81,607, these two values are similar. We have simply transferred the gross profit of trading account to the P&L account, and we have written all the indirect expenses and indirect income, and the net profit for the organization would be 1,48,707. So wherever we have the written value net profit, we will write the net profit. Okay, so in this case we have trading. We discuss about the trading and P&L account, and now we are moving to the balance sheet. In balance sheet they have given the reserve and surplus capital which we will require. They have given the loans, that will be the part of debt portion. We have the current liabilities. You can see here that values we have written in the inner column and final values written in the outer column. And then on the asset side also we can see that we have written values in the inner column related to furniture, land and building, plant and machinery. There is no investment. Then they have written the value of the fixed asset. Then for the current asset also they have written some values, and these current values are present here, means total of current asset are given here. And at the end you can see that in balance sheet they have written, I have highlighted it with the blue color, that 2,28,707 is the profit portion that they have transferred to the balance sheet, is the profit portion which they have transferred to the balance sheet. And while doing the question we discussed that for capital employed you have to take reserve and surplus which is given to you. You have to take the capital and the profit which is transferred to the balance sheet, the profit which is transferred to the balance sheet. And how it comes, we create a profit account separately. In that we find out what is the opening balance, what is the value which we are transferring for the current period, and the balance means अगर कुछ वैल्यू है तो उसको आपको ट्रांसफर करना है कहीं पे, so you can write the transfer, and whatever balance you have you can, whatever balance you will have you can transfer to the balance sheet, you can transfer to the balance sheet. So we have to just focus that this is the amount of profit, this is the 2,28,707 is the amount of profit which are given to the owner for the capital which they have employed. Okay, now we are moving to the solution portion. This is what we have discussed related to the current means question. In case of current ratio, you can see the formula is current asset upon current liabilities. So simply we have to write is equal to cell in which we have written the current asset divided by current liabilities. We can see what is F9 and C9. Now I'm going upward. You can check the formula in the formula bar. You can see in the question they have given you the current assets and current liabilities. Current assets are given in the F5 and current liabilities are given in the C9. So current asset divided by current liabilities will be your current ratio. To check the formula, you can refer the formula bar. Now we are moving to the next formula that is related to the quick ratio. In quick ratio we discuss that current asset minus closing stock minus prepaid expenses divided by current liabilities. Now you can check what all they have selected. You can see the formula in the formula bar. The formula is present in the formula bar. F9 is your current asset. From current asset we are deducting the E10, that is your closing stock. E15, that is your prepaid expenses. Then dividing it by the current liabilities. That is C9. Right? So this is the formula for the quick ratio. Now we are moving to the next formula, that is debt equity formula. The formula is debt divided by capital employed. So debt means loans, secured loans and unsecured loans both, and divided by capital. In this case we have the capital employed, debt divided by the capital employed. So debt is the loans, secured and unsecured loans both. So you have to take total of these two divided by capital employed. and capital employed is the reserve and surplus plus capital plus profit which we have transferred in the balance sheet plus profit which we have in the balance sheet, right? Now I'm showing you the formula. You can see I have written C6, that is the loans divided by the reserve capital, and C16 is showing the profit which we transfer to the P&L account, Now I'm moving upward to show you what values we have selected. For formula, you can check the formula bar. C6 is what? C6 is our secured and unsecured loans, means debt divided by capital. So capital here means reserve plus capital plus profit which is transferred to the balance sheet plus profit which is transferred to the balance sheet, right? So in this case of debt divided by capital, debt to equity means reserves plus capital plus profit which is transferred to the balance sheet. These three portion will completely create the equity value, right? Now we are moving to the next formula. Next is gross profit upon sales. So gross profit upon sales means we have the single value. Easily you can get the values. So what is the gross profit? Gross profit is given in the trading account and sales is also written in the trading account. Gross profit divided by sales will be your formula. You can check here in the formula bar that we have divided these two values only to get the gross profit ratio. Next is net profit ratio. Net profit ratio is also very simple. In that case, you have to simply divide the net profit by sales. And that too will be available on the right hand section. So what is the net profit? Net profit, when I'm simply saying the net profit, so I'm talking about the profit which we get in the P&L account. So this is the profit which we have in the P&L account. Net profit 1,48,707 divided by the sales. In sales also we don't have the sales return, and also we will just write the sales value. Then we have the operating cost ratio formula, in which we can simply deduct the net profit ratio from 1. So you can see 1 minus D31. D31 is showing the net profit ratio. So 1 minus net profit ratio will be your operating cost ratio. Then return on working capital, net profit divided by working capital, So net profit we know we will get in the P&L account, and working capital is current asset minus current liabilities. So net profit divided by current asset minus current liabilities. For formula, you can now refer the formula bar, and you can see this is the net profit. J17 is showing the net profit divided by the current asset, that is F9, minus current liabilities, that is C9. So this is the return on working capital. Now we are moving to the next formula, that is, or next ratio we can say, that is inventory turnover ratio. Inventory turnover ratio is the cost of goods sold divided by average inventory. How to calculate the cost of goods sold? Opening plus purchases minus closing. Divided by average inventory. Average inventory again they have taken as closing stock. So you have all the formulas in front of you. You are just required to put up the values. Everything is given to you. Formula in the final solution, means in the final exam or in the book and solution, they have given you the formulas. But in question, they will just ask you the name of the ratio. They will not give you the formula also. So formula you have to remember. Whatever formula we are discussing in the class, they are the important ones. You will not get any other formula other than these. Then, because we can have n number of ratios. So here we have the inventory turnover. So for inventory turnover, opening plus purchases minus closing divided by closing stock. As for the average inventory, we are taking the closing stock. So opening plus purchases minus closing. You can see the formula bar for the formula for the referring the formula. You can see the formula bar. Opening is the J3, J4 is the purchases, M4 is the closing divided by the closing, because in this question in your book they have taken the closing stock as the average inventory. So we have to follow one system. So we are following whatever is given in your computer application book, but the actual thing is that you can take opening plus closing also. Right? Now we are moving to the next formula. That is working capital turnover. Net sales means sales minus sales return, but sales return is not here. So we can say, we can take the sales is equal to net sales divided by average working capital, or you can say that current asset minus current liability. So they have applied the formula net sales minus current asset minus current liability, and we know that F9 is current asset, C9 is current liabilities, and M3 is showing the sales. You can check here. For formula, you can refer the formula bar. Here you can see that sales divided by current asset minus current liabilities. Sales, that is M3. F9 is current asset and current liabilities is C9. Right? Now we are moving to the next formula. And the last formula, net profit divided by capital, return on capital employed. The next ratio is return on capital employed, return on capital employed. So net profit divided by capital employed, net profit divided by capital employed. So capital employed is, we have already discussed all the reserve and surplus, capital and profit which we have transferred to the balance sheet, profit which we have transferred to the balance sheet, and net profit. When I'm writing the net profit, this means I'm talking about the profit which we have in the P&L account. When I'm writing the net profit, this means I'm talking about the profit which we have in the P&L account. And when I'm talking about the profit in the capital employed, I'm talking about the profit which we have in the balance sheet, which we have in the balance sheet. So here also we are applying the formula. Net profit is J17. Then reserve and surplus, capital, and C16 is showing the profit which we have in the balance sheet. Now we are moving to see the formula. In this case, the net profit is the J17. Net profit is the J17, that is 1,48,707. Then divided by the reserve, that is given in B4. Capital is given in B5 and C16 is given in the balance sheet. We have added these three things to get the capital employed. So return on capital employed is net profit divided by reserve and surplus plus capital plus profit which we have in the balance sheet. So now we have covered all the ratios which we have to answer in this particular question, ratio analysis.